The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on Friday, we saw the release of the June WASDE report from USDA. Numbers coming in pretty much as expected. Very minimal changes seen in the report. Here to walk through it with us and talk about what's happening in this market trade, we welcome in Ted Seifried with Zaner Ag Hedge, joining us here on the show today. Ted, how are you, buddy? Good to catch up with you.
Doing well, Jesse. I'm on the road again, sitting in Muscatine, Iowa. But yeah, life is good, man. Life is good.
Well, you being on the road, obviously getting a decent look at how that quart of soybean crop is doing there throughout the Corn Belt. And I know we're going to talk about that and talk about weather here as we discuss the markets. But obviously first, WASDE report out on Friday. As I mentioned, minimal changes. Sounded like everything pretty much came in line with pre-report expectations, Ted.
Absolutely, Jesse. And somewhat unsurprisingly so, right? Because the bigger reports are at the end of the month with the planted acreage report and quarterly grain stocks. So you knew there wasn't going to be a whole lot. Well, you knew very likely there wasn't going to be a whole lot of change in production. We know they weren't going to change yield before that planted acreage report. Or I'm sorry, we knew they weren't going to change acres before that planted acreage report. And we knew very likely they weren't going to change yield. It is extremely rare for them to change yield in June. There has to be an extenuating circumstance. Generally, it's because of delayed planting. Last time I can think of it was 2019. We had not seen them do that on a hot, dry April, May. Go back to 1992, which is the previous record that we had for dry April and May. They didn't change yield on that report in that June report either. I think there are people that are clamoring that want them to change the yield, that have wanted them to change the yield or lower the yield from that 181.5 in corn ever since that number was published. But that doesn't happen on this report. So, unsurprisingly, production stayed the same. We had a couple small tweaks on demand, but the USDA is not going to be aggressive on the demand side of the equation either, because also at the end of the month, we have quarterly grain stocks. That's going to give them a much better picture into how demand has been in the last quarter. Those are hard numbers. I think, they were compelled to make a couple moves specifically on exports, just to let the market know they're paying attention and they realize we're way behind, right? But again, hesitant to make any big sweeping demand changes until they see quarterly grain stocks and really, prove that out. You will see big changes on next month's report, and you'll see big numbers at the end of this month on those acreage and stocks. But this report was and almost always is kind of a ho-hum report.
Very true. Well, and to your point about some of the demand numbers not really seeing much change, I know some folks in the trade said the USDA could justify up to maybe 100 million cut, 100 million bushel cut demand for exports, ethanol use, et cetera. And, you make a great point waiting for the quarterly grain stocks numbers, because that's really going to have to set the table, it seems like, for us here before we see some major cuts to that side of the ledger, which I think we all agree there's going to be some sort of cut from USDA come, now probably July's report, et cetera, Ted.
Yeah, corn in particular, I think it actually gives them the benefit of waiting a little bit to see a little bit more about bean exports. I mean, we have seen some flash sales lately, and last week's sales number was, it was better. And if those keep improving, maybe they won't have to cut soybean exports much more than they did, even today. But for corn, yeah, right. Unless there's something really surprising happening on the feed and residual side that we're not seeing. I would agree with that. The writing's on the wall. There's going to be very significant significant cuts on the demand side of the equation for corn. Bigger carryover, bigger beginning stocks for next year, bigger buffer for a lower yield. Yeah, but like I said, quarterly grain stocks will allow them to make these changes. They don't want to have to go and reverse themselves if there is some sort of surprise draw on corn demand in that quarterly grain stocks report. But I don't really see that, Jesse. I mean, I think we would be seeing that somewhere, right? We're not seeing it in ethanol. We're not seeing it in exports. So it'd have to come in the feed residual category. We just don't have the animals out there. Yeah, we're trying to feed them to higher weights, so cattle in particular. Hog weights have come down recently. I just don't see it. I don't know, unless the crop last year was smaller than what they had said. I mean, there's always that. There's always a possibility of revisions lower. But again, we'll talk more about it when we get closer to that report. But at the moment, I'm not really seeing a shockingly bullish quarterly grain stocks report. The acreage report could be spicy, but
yeah. The acreage report could definitely be spicy. I think that's a great point, and that ties into, I think, the weather discussion, which I'll get to in a minute. Just a few other notes on the WASDE. I know we saw the South American numbers, a little change, a little cut in Argentina's quarter bean production. Brazil was raised a little bit. I think that was pretty much as expected as well. And then I know some folks are watching the global wheat balance sheet. I didn't know if you saw anything there, Ted.
Yeah, so for the South American numbers, I think we all thought they should have done this last month. And our trade guesses were pretty much the same as they were last month for the cuts for Argentina, that specifically. They did it. It's done. That might be the last of what they do for Argentina. And you look at the global balance sheets for corn and beans. Yeah, Argentina is a factor, but it's not putting us in a tight global grain situation, mainly because that Brazil first season soybean crop was gangbusters, and their second season corn crop is gangbusters. I mean, looking really, really good. And they're going to start getting into harvest there pretty aggressively fairly soon. So, yeah, that Brazilian corn crop has been, I think, the main reason why we are really struggling with our corn exports right now. Along with, high prices are the cure for high prices. We are rationing demand. That's the thing. As far as wheat is concerned, I think wheat's starting to get a little undervalued, but the high dollar is a problem, and the fact that everywhere else in the world has wheat is a problem. Wheat's fairly abundant. You wonder if there is and how much damage there is to that Chinese crop. I think likely whatever damage is done, they're still going to feed that wheat, but their milling quality wheat might be lacking. So maybe there's an opportunity for the higher quality wheats for pickup and exports. Other than that, yeah, it's a real tough argument for wheat. Real quick, interestingly, they raised wheat yield slightly. I mean, ever so slightly. But I mean, there's a lot of people that are still clamoring that USDA's yield on wheat is still way too high. Well, they just gave you a real loud and clear answer. They're not coming down on that. So yeah, I mean, again, wheat, I think relative to corn even is on the cheaper side, but I don't have this big bullish argument for wheat really. The one thing that can happen is a short covering rally. I mean, the funds are very short in wheat, and we give them a spark to cover their shorts. Things could get spicy, to use that word again. But the thing is, Jesse, we've had things that could have been triggers for that. Dams getting blown up in Ukraine. I mean, all the things going on with Russia and Ukraine hasn't triggered it. The funds have not been scared enough, anyways, to go running for the doors. So I don't know what it would take. And it will happen. They'll get out at some point. It's just, if you're a wheat producer, you'd love to see them get out in a hurry, because then that's when you get those spikes. If they get out slowly, it might not do a whole lot for upside potential. So yeah, it'd be great to get some sort of spark. I don't know what it would be.
Ted, let's talk about the weather picture here, because obviously outside of a WASDE report, we're really in the throes of a weather market here. Very dry in the eastern core belt. A lot of folks have been calling for this pattern shift here, presumably this weekend and into next week, getting some much needed rainfall. But you've been traveling. What have you seen with some of that crop in Illinois, Iowa? What are you hearing from folks? How much is this weather market playing into things here this weekend? What do we need to be watching for and concerned about, do you think?
Yeah, Jesse, first of all, what I've seen, On my route into Iowa yesterday, which is, basically most of northern Illinois, and then, I just made it really into the beginning of Iowa. So northern Illinois is really all I can comment on right now. I was surprised at how good it looked. Like, you got to say that the plants are small, right? Plants are small. But you're still green. It's not brown. It doesn't look dead. You've got some squirrely looking corn, and it is small. But I really do feel like if there is that weather pattern change, if we start getting this rain, you're going to see a big comeback in this crop. I think a lot of the potential is still there. And to that weather pattern change, this is a huge weekend. This is a huge weather weekend because of those forecasted rains. Now, those forecasted rains aren't going to fix the problem. The point is, though, if those rains fall on these dry areas that haven't been able to get rain for going on 2 months, that suggests that the weather pattern change that a lot of weather forecasters are calling for is actually happening. And that will be the end of the weather rally. We haven't had much of a rally, to be honest, Jesse, but that will end this whole, weather conversation. At least for now. We could certainly go back dry again, but likely if those rains happen this weekend, again, I think that's a very strong indication that the pattern is changing for the better.
Great thoughts. Real quick, livestock. It's been an interesting run in this cattle market and fairly mixed activity in cattle and hogs on Friday. Any thoughts in the protein sector for you, Ted?
Cash cattle just keeps going. And now box beef prices are really starting to heat up. We've got box beef prices the highest they've been since September of 21. And if you remember what was going on at that time, we had COVID issues. We had a hard time keeping plants open. So that was a different story. The domestic demand, it's starting to wane just a little bit. We were a little disappointed about what the demand was for the Memorial Day holiday weekend, but not much, right? If people are willing to pay, if demand is good in a situation where supply is tight, that still means higher prices. I don't think the price rationing has actually occurred in cattle yet. Not at the packer level, not at the consumer level. So yes, we've cooled it off. We had gotten very overbought. We got close to 90% on a relative strength index on Wednesday morning. Then you had a reversal lower by the end of the day, had now corrected that RSI back into the upper 60s. So, I don't think that was a top. I think that was just sort of a corrective move. I'm still bullish cattle unless something happens to slow the consumer down, i.e. recession, global something. But I don't see any of that really on the horizon at the moment.
Ted, before we let you go, I know you got to get back on the road. Any final thoughts for us? Anything you want to reiterate for folks today?
This wasn't the big bullish report that a lot of people were hoping for to get grains to rally and sell higher prices. The weather, like I said, if we get these rains, and they're looking likely, right? If that happens, we don't have much of a weather issue to talk about. You could be looking at markets that are just headed lower from here. I mean, but consider that we're still at some really good prices. Take all of that into account. If you're really undersold for new crop, if you still have a bunch of old crop laying around, I mean, come on, let's take some risk off the table here, Jesse. That's my big message right now.
And I know if folks have questions about taking some of that risk off the table, they could reach you at Zaner Ag Hedge very easily. How can they get a hold of you?
Yeah, Jesse, my direct line is 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. And I'm also on Twitter. I'm at the Ted Spread.
We appreciate the time, buddy. Great to catch up with you again. We'll talk to you in a couple of weeks. Have a good one, and we'll talk to you soon.
Thanks, Jesse. Always a pleasure. Have a good one.
Ted Seifried, Zaner Ag Hedge, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.